Hi, everyone. I'm Dan Longo, First Vice President of Commercial Lending at Liberty Bank. Liberty Bank is a 198-year-old mutual savings bank with over $7 billion in assets. We have 60 branches throughout Connecticut and Western Mass. I'm pleased to say that the CBIA and Liberty Bank have been partners together for many years. We are a very proud sponsor of the series today. Today's presentation is about MyCTSavings, and I believe you're really going to enjoy our presentation today. And over to you, Diane.
All right, thanks, Dan. Yeah, so I'm Diane Mokriski. I'm an employment attorney here at CBIA, and one of my jobs here is to answer employment law and HR-related questions that come in from our members. And we have been getting a fair number of questions about this new-ish retirement program. It's a mandatory retirement program in Connecticut for most employers. We'll talk more about that, who it really applies to and who it doesn't. And so as you can see, we'll have three speakers today. One of them is Sean Scanlon. He's the state's comptroller. So he has been comptroller since just January of this year. Prior to that, he was a state representative. So we'll hear from him briefly just to give you a sense of what this program is all about. And then we'll hear also from Lisa Kidder, who is the program strategic communications manager, and also Jessica Muirhead, who is the director of the program. So we would really like this to be an interactive program. So for all of you out there in the audience, if you could please submit questions through the Q&A, and we'll get to those, as many of them as we can. We're going to run until 2 o'clock. And so please submit your questions and we'll see if we can answer those. And then before we do that, though, we're going to have a presentation from Lisa and Jessica. And before we do that, let me just throw this off to Comptroller Scanlon. Thanks for joining us.
Well, thank you. And thank you to CBIA for hosting this important discussion. As you mentioned, I have, Diane, only been the comptroller for about 6 months now. And really enjoying this job. And one of the reasons I am really enjoying it is because we have the tremendous honor to be in charge of this program and running it. And so, for me, it's a personal thing. My mom was a small business owner who, when I was growing up, had a lot of tough times. And I think everyone on this call knows how difficult it is to run a small business. And she was doing that as a single parent, too, which made it even harder. And one of the things that I always remembered from my mom was that she would have loved nothing more than to offer benefits to her employees like health insurance or retirement, but she just couldn't afford it. It's not that she didn't want to, it's that she couldn't afford it. And so many years ago, 8 years ago, actually, a law passed that gave the comptroller's office the ability to run this program. And the goal was pretty simple. We wanted to increase the number of people in Connecticut that had a work-based retirement option plan, and to try to do so without actually having that cost the business anything. And so what Lisa and Jess will talk about this morning, or this afternoon rather, is how the program works, how you can sign up for it, and how you can use that employee-sponsored plan to help us help your employees at no cost to you. There are a lot of questions. There is some misinformation that's out there about that. And so that's why I'm just so glad that CBIA was willing to host this very, very important conversation. I know people are busy. You may have seen me doing some wild things like making donuts and making pizzas, and I'm really trying to visit a lot of small businesses across the state to learn about what they do, but also to promote the program. And so you'll be seeing more of that. When I started and took office, we had about 870 businesses that were signed up, and as of today, we're closing in on about 4,500. So this program is rapidly growing. I think that's really in large part due to the two women you're about to hear from, Lisa and Jess, who are doing a great job of helping spearhead this in my office. But it's also due to groups like CBIA and to all of you who are helping spread the word about this. And if you have questions or concerns, you can always contact me and certainly contact Lisa and Jess. And I'll just stop there and just again, thank CBIA for having this important discussion today. Thank you, Diane, for helping moderate this. And thank you all for listening and paying attention, and for what you do for the state of Connecticut in the business community. Really makes a difference, and just really grateful for that. So thank you all very much.
All right, thank you. So Jessica, are we starting with you?
So Thank you so much to CBIA for providing us with this opportunity to talk to you about this program today. I will start with a little bit of background about this program and why it was passed into law in the first place. So across the country, there's a growing segment of workers who don't have enough retirement savings for their future or access to an employer-sponsored retirement plan. So to address this issue, states across the country are introducing auto IRA or other state-sponsored retirement programs. Connecticut is the fourth state to launch a program of this type and is taking a leadership role in this area. On the map on the screen, you can see that the states in shades of red offer an auto IRA program or a similar program. The states in the green and yellow have legislative proposals or study groups looking at this program or creating studies to look at create similar auto IRA or other state-sponsored programs, and only those remaining few blue states haven't yet taken any activity. So there's a lot of people looking at this problem as these programs are spreading, and there are about 20 states now that have some type of state retirement legislation for the private sector. And some of the reasoning behind that is just that we're looking at the financial cliff of retirement savings across the country, where it's estimated that a lot of people are just not going to have enough to provide for themselves in the future. For federal data for the states that went before Connecticut, there were 3 of them: Oregon, Illinois, and California. The Pew Research Center took a look at whether what the impact was of auto IRA programs like MyCTSavings on the private sector, and they found that the businesses without plans were adopting new plans at rates that were similar to or above the national average as before. So these types of programs seem to be complementing the private market, or actually boosting the private market of adoption of private 401k plans, as well as participation in the state's plan. So it's kind of a win-win scenario for everyone, and especially for the private sector workers in the states that have adopted programs like these. So in Connecticut alone, we have more than 600,000 workers who have no access to an employer-sponsored plan. And we know that employer-sponsored plans, or being able to save easily and automatically through your paycheck, is the best way to get people to start saving. It takes a lot of the burden off of the employee to have to add one more thing to their plate. Nearly 70% of Americans are concerned that they don't have enough for retirement. We know that Social Security is not enough for most retirees. AARP estimates that about 40% of current retirees in America live off of Social Security alone, and the average Social Security payment in retirement is around $1,800 a month, which is barely enough for a one-bedroom apartment these days. That doesn't really go very far, even if they're not paying rent. The national average for the grocery bill for a couple of over 60 years of age is $655 a month. And gas is, over $3 a gallon. Plus other costs in retirement of housing. Not everybody owns their home, or they may need to downsize because of a lack of income. So without these additional retirement savings, we have greater numbers of people who are going to be looking to the state for assistance. According, again, to the Pew Charitable Trust, insufficient retirement savings is going to increase the taxpayer burden of over $334 billion between 2021 and 2040, so in the next 20 years, with an estimated $6.5 billion shortfall in social services in Connecticut alone, just because there wasn't enough retirement. And I'll read a little bit from Pew themselves, that even the small savings over a worker's career can help to offset the effects of this major shortfall. For example, if households save an additional $1,600, almost $1,700 a year, or about $140 a month over a 30-year period, that could erase the retirement savings gap and eliminate extra taxpayer burden to help people maintain their lifestyles in retirement and be able to retire in dignity. Any savings above that status quo would help to reduce the fiscal obligations of the state and to improve outcomes. So to address these concerns of the retirement cliff, MyCTSavings was created by the legislature to help Connecticut employees save for a more dignified and stable financial future, and designing it with minimal impact to our business community. We know that our business community wants to be able to provide these things to their employees, but for various reasons have not or are not in a place to be able to do that. So we have designed this program to be as easy as to facilitate as possible. So if your company or a company you work with has received a notification to register for MyCTSavings in 2022, last year when we launched, or this year in 2023, and you haven't acted on it yet, now's the time. The deadline to register for the program has been extended to August 31st to give people more time to sign up and to get your employees on the road to retirement savings, so that we have a more stable future for everyone in Connecticut. I will hand it off to Lisa now to take over for a few of the details about how the program actually works, and then we will move to a Q&A at the end. Lisa, take it away.
Thank you. So I'm going to get into some of the nuts and bolts of the program, that the kinds of things that everybody has a lot of questions about. As Jessica said, the program was designed to make it really easy for employers to offer a plan for their employees. We know that a lot of employers that we talk to have said, you know, I want to offer a retirement option for my employees, but it's either, you know, the cost of managing a plan, the administrative burden, or the risk to the business to act as a fiduciary for a plan. So the MyCTSavings program addresses all three of those issues. First of all, it's free to the employer. It's simple to facilitate. It often takes just a few minutes per payroll period, and there's no risk to the business. There's no fiduciary responsibility, and there is no employer match because the accounts are set up as a Roth IRA. So all the employer really needs to do is facilitate the program and keep their employee records up to date. By doing that, you're able to help your employees reach their financial goals, and it can be almost a set it and forget it kind of a situation. Once you set it up, they'll be, you know, get in the habit of saving, and it will set them up for a much better future. The important thing here is that we're linking someone's paycheck with a retirement savings account that is in control of the employee, so they can take care of their financial future. So in terms of eligibility, participation in the MyCTSavings program is for employers that don't currently offer a retirement plan, with 5 or more employees as of October 1st of last year, and at least 5 of those employees have to be paid more than $5,000 in the year. So all employees, full and part-time, are automatically enrolled in the program, and the employees have the opportunity, can opt out if they choose. The other thing is the employees must work in Connecticut and have been employed with the company for 120 days. I just want to add another note here that a lot of people have asked us in the last 6 months or so whether or not sole proprietors are allowed to participate in the plan. We do have a new program that is for solopreneurs or businesses with fewer than 5 employees. The information is on the website, and you'll be hearing about it in the future. But yes, the short answer to the question is yes, individuals can sign up for our plan now, and they will get a Roth IRA. And to set it up, you just go to MyCTSavings.com. So if MyCTSavings does apply to a business, this page on our website, MyCTSavings.com, is where that employer starts. You click down on the lower part of the screen on the left, register my business, and that will take you to a screen where you enter your employee ID, your FEIN, and then you can fill out the information from there. If you are a company that already offers a qualified retirement program, this is where you start as well. Just below register my business, you will see certify my exemption. And if you've received a notification from us, you go in, you hit certify my exemption, provide the access code that is in the notification, and you are all set. So even further into the nuts and bolts here, for an employer, there's just 3 steps. You go to myctsavings.com and you register there, upload your payroll information for all your employees, regardless of how much money they make or whether they're full-time or part-time. And third, you submit the employee contributions on your pay cycle and keep your staff lists up to date. So I want to make sure that everyone's clear that the information we ask for is just what's necessary to open up a Roth IRA account and for MyCTSavings to communicate with the employees. The accounts are all on our online portal, and they're professionally managed by Vestwell State Savings and Bank of New York Mellon, who are the contracted administrators through the state, through the Office of the Comptroller. And as the Comptroller mentioned earlier, we have been visiting businesses across the state and talking to owners, and we're hearing from them that the program is really simple to administer. Especially, we've heard from payroll managers that it takes them minimal time to process it, and many of them as employees are also very happy to have that opportunity to save for retirement. Over on the left side of the screen, you'll see the list of payroll software programs that MyCTSavings works with currently. The list continues to grow. Gusto was actually just recently added, and they continue to pilot and look for other programs to include in the program. So from the employee side, let me just give you a quick overview of what it looks like. Once a business owner enrolls their company in the program, MyCTSavings will reach out to the employees to explain the option. It is completely voluntary for employees to participate. Once the company is signed up, the employees have an initial 30-day window or enrollment period where they have an opportunity to make their decision. They can opt out if they'd like to, and generally the opt-out rate on a nationwide basis, not just here in Connecticut, is less than 20%. So 80+% of people who are registered in the program are saving for their retirement. If an employee does nothing during that enrollment period, at the end of it, there will be a Roth IRA opened up in their name with a 3% payroll contribution in a diversified targeted date fund. Now, if the employee wants to do more, they can log in and customize their savings choices. They can increase or decrease the contribution level to above 3%, or they can reduce it if they want. And then they can also choose from a variety of investment mixes, they are listed on the website if you want to take a look at them. So I think, and as I mentioned before, it's all voluntary. The employees can, if they change jobs, it's a portable IRA. It goes with them. If they go to another company that's also facilitating MyCTSavings, it can be picked up there. If they want, the employee can connect it to their own bank account and continue to use it or they can decide, that it's up to them what they want to do with that with the account. There is a customer service number dedicated to employees. And there is also on the website, you can find information both in English and in Spanish. And if an employee decides to opt out, they can always opt back in at any time. So it is really flexible on both sides of that coin. And as we were speaking earlier, even small savings can really make a big difference in an employee's life, as that Pew study highlighted. So I pulled off of our website a quick example. If a 30-year-old making $50,000 a year started saving at 3% right now, by the time they were 65, they would have over $250,000, and which would be about a monthly in about $1,180 for about 25 years. So I do want to encourage people to visit our website. We have this calculator. We have a huge section that includes other resources, a Q&A for employees, a Q&A for employers, and also how-to videos that will help someone in your payroll department, or if you're doing it yourself, understand how to do that process. So I would encourage you definitely to look at the MyCTSavings.com website, because you will find things that will be helpful there. So we wanted to give you an update about how we're doing right now. We're just over a year from launch. So, we're very carefully watching our numbers. We have 4,300 businesses enrolled in the program. It's going up weekly, and we're very pleased with those results because we were at about 600 and something in January. We have nearly 15,000 employees are now enrolled in the program and saving for their futures in a Roth IRA. And actually, we just had someone call 5 minutes before we started to ask how they would increase what they do to go in and increase the percentage of savings, which is something we really like to hear on a regular basis. We have more than $5.5 million in assets in the program, and that's also up from $1.5 million at the beginning of the year. So we feel like we're making really good progress with this program, and it is the law, so we are encouraging people to sign up. As a business owner, if you want to sign up if you qualify, or we would ask if you don't want to sign up for our program, maybe you'd like to have a larger program and offer your employees a match, then that's a great thing to do. And, go to a private organization to set something like that up, or you can set it up yourself. And we also would ask that you share this information with other businesses in your network. We know that businesses who belong to one organization like CBIA tend to also be active in other organizations, either in their field or chambers of commerce. So we would encourage you to please share this information with your colleagues. And just as kind of an aside, these are the business categories where we are seeing the most enrollment. It's probably not surprising that in terms of those 4,300 employees or employers registered, we're seeing a lot of restaurants and food services, whether that's full service or part-time service, or coffee shops, donut shops, which the comptroller loves. As we are, doing that, we're seeing a large number of those. Landscaping services, childcare services for the elderly and disabled, beauty salons, and janitorial services. Those are our top categories in enrollment right now. And the other part of that is that in terms of the registrations, we're seeing the greatest number of registrations from the smaller businesses. Those businesses in the 5 to 25 employee range account for about 85% of our current enrollment. And I think the fact that the plan is flexible for the employer and the employee really helps organizations like these to meet their needs and to meet the needs of their employees. Some of these businesses as well are going to have 1099 employees, and they can sign up for an individual plan if they would like. There are other benefits for businesses as well. Offering a retirement plan or a retirement program helps employers attract and retain employees. We've talked to a number of people. Actually, we talked to a coffee shop owner in New Haven and a bakery owner in Middletown both said almost the same thing to us, and that was that having, a retirement option for their employees really encouraged their employees to stay. It made it possible for their companies or for their employees to stay with a small company and not move to a larger company that might offer a more comprehensive benefit program. And additionally, the Employee Benefit Research Institute study also found a direct correlation between employers offering financial and wellness initiatives led to increased employee productivity and satisfaction. And those of you who are business owners know that if you are, if your employees are happy, they're going to stay with you and they're going to work hard for you. So the MyCTSavings program was rolled out in waves over a period of a year. So some of the people who may have been sent the information and notification might have lost track of that notification over time, or perhaps the notifications have been misdirected to someone who might not still be in your organization. So if you've received a notification or if you've lost your access code, you can call the customer service center. This is the Employer Customer Service Center, 833-811-7435. And you'll be able to retrieve that access code over the phone. They will give it to you. If your business qualifies for the program, doesn't offer a retirement plan and has 5 or more employees, you can call the customer service plan to first confirm that your business is on the list and get a code. And if your company is not currently on the list, you don't need to do anything right now, but you will likely receive a notification from us in the future, and you would be obligated to respond at that time. So, whether or not you received your notice last month, last year, your business can sign up anytime. As Jessica said, the deadline to sign up for MyCTSavings was extended to the end of August of this year, but we would encourage you to sign up now and get your employees into the process so they can start saving. And we are always here to help. We have an employer support team, an employee support team. The employer phone number is listed there. You can find a ton of resources, information, and some of it very specific and some of it very general. And if you visit myctsavings.com, you can search our site for more. And we're happy to take questions now. I see we have several, so that's great.
All right, Lisa, I will jump back in to address some of the questions in the Q&A. And just a reminder, if you have any questions for us, just type them into the question and answer chat. So I'm seeing that the program final entry date was they saw a date that the program final response date was delayed until September 30th. Is that correct? No, it's till August 31st. Is the final deadline extension for those businesses who were contacted in the rollout waves 1, 2, and 3. We will have subsequent yearly waves for new businesses who become subject to the law. So, for example, those who had 3 employees a year ago and now have 5 employees, they'll get a new rollout, and they would have a different deadline. But for now, if you were contacted by the program at any point between the program launch in April of 2022 to today, the final deadline is August 31st. Do you need to register if you already have a savings plan? So if Lisa covered this a little bit, but if you already have a savings plan and you receive a communication from the program, that just means that on our business list, we didn't have anything that showed you have that plan. So you would just go in, make a quick exemption to just fill out, it's like a 1-minute form, just fill out some basic information and you'll be exempted from the program. And then there's a similar question right after that. If if companies that have a 401k plan need to register only if you hear from us. So if you receive a communication from us and you have a 401k plan or another qualified retirement plan, such as a simple IRA or a 403b if you're a nonprofit, then you would only need to certify your exemption to MyCTSavings if contacted by the program. Someone's asking if there has to be a match or the use of a simple IRA. For a private plan, no. The only thing that you need to have for it to be a qualified plan is basically it has to be a qualified plan, 401k, but any of the elements of that plan are not required. So it doesn't have to have a match. It doesn't have to, it doesn't even actually have to cover all of your employees, including your part-timers. If you go with a private plan, for participating in the state's program in MyCTSavings, there's no match required. And in fact, you can't do a match if you participate in MyCTSavings. We don't have a vehicle to do matches. So no, there's no match required. Are the funds FDIC insured? So this is an investment product, and like most investment products, most of the funds, depending on what's invested in, they won't be FDIC insured because the FDIC just doesn't cover, stocks, bonds, and other types of investment products. If they were fully invested in, say, like a money market fund, then that might cover, but it really depends on what deposits those the investments are made, and most of them are going to be stocks and bonds and other parts of that portfolio mix, which are not FDIC insured, as is the case with most investment products. For the getting a copy of the presentation, I saw that I think that CBIA will be sending this out after the close of the presentation. If a company currently offers a 401k for their employees, but they decide to cease that benefit, they would be subject to MyCTSavings and would need to adopt the MyCTSavings plan. The best time to do that is immediately after you cease your current benefit. Just to get it out of the way, you can get in contact with us and we'll get you signed up. Otherwise, we would just, basically the program will see that the program has ceased under the Form 5500 filings, and would then contact the company and say, hey, we see that you no longer offer a plan. You need to start signing up. Is the Connecticut sponsored plan for smaller businesses of under 5 employees mandatory, or will it become mandatory? So currently, no. If you have less than 5 employees, and that includes part-time and full-time, if you have less than 5 employees, it is not mandatory. And in fact, you currently can't by law participate in the program at this time. That may change in the future, but as of now, the legislature, it is for 5 employees or more. However, if you do want to have your employees participate, you could direct them. We do have a self-enrollment process for individuals, so your employees could self-enroll in the plan if they wanted to. That's also an option if you have, say, 1099 employees. We have gotten that question from time to time where they're not wage workers, they're independent contractor employees, in which case you could recommend that they sign up as an individual, but you can't provide it to them directly as the employer because you don't employ them since they're a 1099. if you don't have an integrated payroll service. So if you don't have an integrated payroll service, it's a pretty simple process. Basically what you'll do is that you'll put the deduction, MyCTSavings will contact you and tell you what your employees have elected as their contribution rate. So the default is 3%. Otherwise, they might bump it up to 10%. They might bump it down to 1%. We will contact you 4 days before your stated payroll period. So if you say you do it every other Friday, 4 days before that Friday, we'll contact you and say, here's the list of people, here's what their deductions are. You would then just add that as a deduction line item to your employee's paycheck using whatever payroll service you have. Whether you do it by paper check or if you use another service, you would just add it as a deduction, just like any other withholding that would be on their paycheck. And then at the end of your pay period, you would just sign in to the MyCTSavings portal and tell MyCTSavings how much was withheld from each employee's paycheck. We can take that via an upload. So you could do it manually if you don't have that many employees and it doesn't take too much time, or we will take an upload. So if in whatever format, your payroll service spits out. So it can even read PDFs, it can read your Excel files, however you have it, our system can read that. And then you'll just submit the report. If you signed up for ACH or an automatic bank deposit, at that point, once the report is received, MyCTSavings will then just draw that money from your account and distribute it to each employee's account per the report that you submit. Most of our employees, there are many employers who do it this way manually rather than having an integrated payroll service. And they say it takes about 5 to 10 minutes per pay period. It may sound complicated, but it actually doesn't take very much time from what we're hearing from our employers who participate. Can you do a regular IRA? So I'm assuming that means a traditional IRA. At this time, the law specified a Roth IRA only instead of a traditional, and there are some intricacies of a traditional IRA that might make it difficult to implement. So at this time, it is a Roth IRA per the statute.
Thanks so much. I actually have a couple of questions myself, and I
Sure.
sound like I'm not, you hear me okay, I take it?
Yes.
Yes.
All right, so I understand if you already offer a 401k, you can certify your exemption. We've actually gotten some more detailed questions about that, so I just want to clarify. Let's say I'm an employer and I offer a 401k, but I only offer it to executives. And only to executives who have been working for the company for 5 years. And so as a result, one executive is eligible for that 401k plan and the other 50 employees are not eligible. Am I still exempt from the state program then?
Yes, that is correct. The law does not stipulate whether the retirement plan that is currently offered, what any details about that plan. So if it happens to be that it only covers a certain section of your population and you only have one person utilizing that 401k plan, it does still exempt you from MyCTSavings.
Okay. And so do you have any information on what happens if the employers don't register by the August deadline? What happens to them?
Sure. So at this time, there are not any. There's no penalty. The legislature is currently considering enacting penalties, which would be in the form of, similar to other states, a financial fee for noncompliance. But at this time, there are, as of today, which is June 7th, there is not a financial fee for that. The statute does state, however, that an employee could bring a civil action against their employer for not participating in the program when they were supposed to.
Okay. Okay, and you mentioned that 4 days before you do your payroll day, an employer will hear from you. That's an email or
Yes, it's typically going to be an email. So when you go in and register, they'll provide some basic information about the program, to the program, about your business, and that will include the contact email of the person who will be actually administering this on your behalf. And you can assign other people to administer this on your behalf. So if you're responding, but really a different person is going to be the payroll person each payroll cycle, rather than as you, the owner, or whomever is responding, you can always assign it to a new person.
All right. So, and that email comes every payroll cycle. So if you pay biweekly, you're going to get this email biweekly. And every time so on a biweekly basis, as an employer, you get the email and then you upload the information. It's not like you do it once and then you're done. You do it every single pay cycle.
This would be every pay cycle, because that is how the deductions, the withholdings go from the business to, and we have to know what the program has to know what the deductions are.
Okay. All right. So I'm just thinking practically, if a business has one bookkeeper who is going to do this, and then the bookkeeper is on vacation during payroll, then I guess the employer really just needs to think ahead with that and figure out, oh, crap, we have to make sure we have to contact MyCTSavings and give them a different email so that we find out, right? Like the employer needs that email from you guys in order to accomplish what they need to do each time.
Not necessarily. So the email from MyCTSavings is just going to be informing the employer whether there have been any changes to. It's one to prompt them to do it, to sign in and do it, right? And this is, again, only if you're doing it manually. If you have a payroll integration, then this all happens on the back end. But if you're doing it manually, then basically it just is going to become a part of the biweekly payroll process. So whatever backups there were for that one bookkeeper, to make sure that payroll gets out on time, that would be the backup for this as well. But effectively, that email that comes in, whether it's monthly or biweekly or weekly, that email is just going to be informing you, hey, so-and-so, whichever employee has changed their withholding from 3% to 6% or what have you. However, that's pretty rare, from the feedback we're hearing from businesses. People don't really change their withholdings that often. So it's just going to be informing you, one, to prompt them to do it, to prompt the employer to do it, and two, to let them know, hey, your employee change their withholding from 3% to 5% or 5% to 1% or what have you.
So, but I guess, would the employer need to update MyCTSavings when employees leave, when they resign or when they're fired? Is that something that the employer needs to update?
Yeah, so you would just want to go in, it's a quick process, but you would just click that they're no longer with you. So it would just.
Oh, that would be in response to the email. You'd respond to the email by saying, yeah, this person's not here anymore.
It's all done through the portal rather than by email. But if you would go into the portal, and when you're filling out your 5 employees or what have you, that, okay, this person made this much, this, you would just, there's like a toggle that says, you would click it off and say, this person no longer works at my business.
Okay. All right. What about if remote employees? If you've got a bunch of remote employees who live in other states full-time, but they're working for a Connecticut employer completely remotely, do you consider those workers to be working, quote, in Connecticut and eligible, or no?
Yeah, so the law actually states that they have to be providing services within the state of Connecticut. So I think it would depend upon whether you define the services provided as being within the state of Connecticut, right? So let's say you were a consulting firm and one of your consultants that primarily works with Connecticut businesses, you're a consultant for Connecticut businesses, and one of your employees lives in Rhode Island full-time, they don't really come out to Connecticut, but the businesses that they service as a part of your consulting firm are all Connecticut businesses. Well, then you might make the argument, okay, this person is providing services within the state of Connecticut, right? Because those are, their services are in Connecticut, even though they are somewhere else. So I think it really depends upon how you would define. So, but if you had a consulting firm and there was a branch in Rhode Island and all of your consultants were working primarily out of state, providing those consulting services within the state of Rhode Island, then they don't count, if that makes sense.
Okay. Do you see the question that was just posed there?
Yes, I see it now. My firm has a 401k program. Can our employees use both 401k and MyCTSavings? So the employees could, if they signed up as individuals, right? They could sign up as an individual for MyCTSavings if they wanted to and use your 401k. However, you as the employer cannot facilitate both. If you have a qualified retirement plan, you are exempt from the program and in fact can't participate in the MyCTSavings program and facilitate your own private plan at the same time.
Okay, regarding the access codes, I've spoken to a fair number of employers who say they didn't get a code. And it sounded like from what Lisa was saying in the beginning, that might be because, I guess one reason would be because you determined that they didn't have enough employees at one point. But she also said something else. If you all have information that an employer already has a 401k, you will then not contact the employer. That would be a reason why an employer wouldn't have gotten an access code?
That's correct. So if you are an employer who has a 401k or another qualifying retirement plan, like a simple IRA or a 403b, then and did not receive, were not sent a communication from us, it's likely that basically what happened is that we pre-filter our list, right? Because we don't want to pester employers who are already doing the right thing. They're already providing a plan, and we don't want to have them do extra make work to have to go and exempt themselves when we know that they're already exempt. So what we do is we take the federal Form 5500 filings, which are publicly available, and filter our business contact list to filter out anybody who appears on that list as having a qualified plan that is currently active. So those lists, however, are not always 100% up to date. Unfortunately, there's no, perfect data set. So there are going to be some people who do have a plan who were contacted by our program, and that's just because the list that we had and the filtration that we did with those Form 5500s, just they didn't appear on that list, and so they have to manually say, no, actually I have a 401k plan or whatever it is that you actually offer.
Okay. There's another one posted there.
Sure. My company offers a simple IRA plan. Employees are eligible to join January 1st, earning $5,000 the preceding year. If someone begins employment on June 1st, do we have to offer the state plan? No, because if you are an employer and you offer a qualifying retirement plan like a simple IRA, then you are exempt from MyCTSavings. So whether an employee has a specific waiting period or criteria that they have to meet in order to participate in your plan, you're still exempt because you do offer a plan, even if the plan takes, 2 years or something to kick in for a full-time employee or what have you. So no, you do not have to offer MyCTSavings to them in the interim while they're still in their waiting period.
When you're first enrolling your employees, if you have some employees that are new, so they wouldn't be eligible because they've only been working for a month or two, do you still include those new employees on your list, or do you wait until they're eligible?
So a new employee, currently they have to be employed for 120 days. So you would add them after that 120-day period.
Okay. Okay. Well, I think that is it. We don't have any other open questions. I peppered you with as many as I could think of. Nice job with that. Thank you.
Yeah, no problem.
So yes, we will check out the chat. You'll see some of the answers to the questions about when the recording will come out. Before I close, you want to answer this one? Is it a pre-tax?
Oh, sure. No, it's a Roth IRA, which is a post-tax account. So it is a post-tax deduction.
Okay. All right, Lisa and Jessica, thank you so much. And when you see Sean, tell him thank you as well. And for CBIA members, if you have more questions, you can either contact MyCTSavings directly, or as always, you can contact me or Philip Montgomery at the HR hotline. So thanks very much and have a great afternoon.
Thank you so much for having us. It's our pleasure.
You're welcome.